Good morning, good afternoon, and good evening to you all. I'm Rustin Edwards with my illustrious co-host Matt Stanley in Dubai, and this is the Smoking Barrel, episode 10 of season 4. Ooh,
Wow.
10 down, maybe 10 more to go.
Wow. Gosh. And I haven't been on a plane for 2 weeks.
Whoa, whoa,
I
whoa.
know.
Oh my God. That's gonna make jet demand collapse here.
Well, we're going to touch on that. What a lovely segue into the jet demand story. We'll touch on that later. But no, good morning, everyone. It's it's only 32 today. It's suddenly 10 degrees cooler than it was yesterday. I know you're all getting a bit bored of my it's 9 degrees in Antwerp. Christ. End of May and it's 9 degrees and raining. I mean, yours in size offered on.
Yeah, it's a bit moist, a bit wet here, and a bit windy. It's a typical North Sea. I don't know if I'd call this spring or fall, but it feels more like autumn than it does going into summer.
Autumn would be right. We don't know what fall is. I'm sorry. We do, but anyway, yeah, good morning, everyone. Where are we? 84.51 for Brent. Not bad. I mean, considering we went to a 3-month low on Friday last week of $80.65.
Yeah,
Um,
but I think we're just seeing a reaction on geopolitical as well as people just positioning themselves going into the OPEC Plus meeting this weekend, which is going to be a virtual meeting on an in-person meeting,
yeah.
and probably going to be very much a damp squid. 'Cause I think everybody's already accepted the fact that OPEC's going to roll forward and not do
Yeah.
anything.
Yeah. I mean, look, we touched on this last week, didn't we? And we were going to talk about it this week. I mean, yeah. I mean, look, largely in a benign market, why would OPEC do anything? Don't disrupt anything. We 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 said last year, my colleague said in November last year that we don't see OPEC bringing any oil back until January of next year, and which will be from the November meeting, because simply the market's too fragile. There's been too much non-OPEC supply that meant that OPEC have had to kind of rebalance things. The increase in production from the US, from Norway, from Guyana, Brazil, Canada. Has largely meant that OPEC have had to keep some spare capacity. But when that sort of plateaus, which it will, we reckon by the start of the year, start of next year or end of this year, OPEC can bring some oil back. But largely, you know, I don't see oil prices probably a bit lower. Coming into sort of Christmas time, maybe 82, something like that, and it's in line with our forecast. But we're quite bullish summer, and I think OPEC will have a look at that. Mark, refineries are coming out of turnaround. We actually see, I say we, like I've got nothing to do with this. All right. I'm just stealing other people's work. So when I say we, and it's in the loosest sense, it's a bit like decisions I make at home. There's no we to it. Anyway, before I get into real trouble, we actually see that there will be a deficit through the summer, June, July, August, of about peaking at about 3 million barrels a day. And, we actually see prices getting back up more towards the $90 on Brent.
I I actually find that interesting because when you also see the sub story of refineries cutting runs because of poor margin. So it's a bit of an interesting dynamic that you've got in one hand, a lot of analytical firms, not just Kepler alone, but other ones are also predicting a big increase in fuel and crude demand going into the summer months. Yet on the flip side, you have all these stories of refineries reducing runs because the demand for the finished product is not that good.
What's your point?
Well, my point is something's got to give. You can't have, oh my God, super demand for crude, yet poor refining margins. It doesn't
Yeah,
work.
I agree. I mean, look, it's been a few conversations I've had with various people in the market this week. The real dog and gas oil has been the poorest performing part of the barrel. Q2 surprised a lot of people. It's in terms of its weakness, even with the drone issues, the drone strikes on Russian refineries from Ukraine, which are largely back now, to their side, which we're trying to
And
ascertain
it's
what's
also
going on.
causing a backlog in Russian gas oil product. Apparently, the amount of gas oil from Russian floating storage is increasing again
Yes, I mean
because
it's
the
just
demand in Brazil's not there, where they've been dumping a lot of the product. And now with the Dangote refinery producing gas oil, talking about exporting gas oil,
yeah.
they're using the West Africa market. So it's a bit of the world is getting a bit flooded on the heavy distillate side.
Well, I think I just want to show you something actually that one of my colleagues Demetrius wrote this week. Um, around the Russian story, just focus on that for a minute. You know, essentially trade volumes haven't changed. If anything, Russia are actually producing the same, if not a bit more, but it's becoming harder and harder to find those conduits, to find those sort of pockets where, you know, you can blend a molecule and change the documentation so it doesn't like it's Russian material. These schemes, these conduits pop up wherever is possible. And one place where it has been possible has been in Greece. Let me just share this with you quickly. Greece tightens grip. Can you see this, Russ?
Yep.
Greece tightens grip on Laconian Gulf. So what we had, I think it's largely lots of people haven't noticed, Laconian Gulf, which is southern sort of central Greece.
Which is off the port of Kamalata, right?
Yes, exactly. We've seen a lot of Kalamatas. They don't just produce olives, people. They're very, very profound in ship to ships as well. Sorry, that's such a stereotypical joke. Anyone Greek, listen, I'm really sorry. But it's been a lot. You see, the area is hotspot for ship-to-ship transfer of Russian oil cargoes. And what the Greek government have done is this naval exclusion zone. So they're monitoring it very, very carefully now. They weren't before. And you can see here, this is a snapshot that was taken before Navtec, this enforcement agency. This is Laconian Gulf here, and these are all the ship-to-ship locations. And then after is nothing there. And I think that what you're going to see is actually, I think, further enforcement of where these Russian cargoes can and can't go. And I think that that's ultimately going to lead to more products on the water, because they can't just shut production in. They shut production in, then it's not easy to turn off one of these wells, and especially in the middle of winter, which will come into obviously Q4. Because they can't get the maintenance, they can't get the parts, whatever they need. So I think that the more enforcement that you see, because it can't just go to Brazil, like you said, it can't just go to the UAE, it can't go to Turkey. Dortiol have stopped Russian imports now of Russian product. So I just think it's a bad news story for gas oil. I just think the world's going to be awash with gas oil. Obviously, the product that was STSing in the Laconian and the Messinian Gulf wasn't going to Europe, it was going further afield. But I just, gas oil balance just seems to be getting longer and longer, and that's dragging gasoline down with it,
Well, I mean, it's a case that you have the gas oil demand of China is not as strong as it has, because China's also been exporting gas oil. The construction industry hasn't really picked up yet, despite the work that the Chinese government is doing to stimulate the real estate economy in China. It really hasn't really taken hold yet. So you don't see that demand for gas oil in the construction fields. You'll see it in the mining industry is not that hard because you're not having that demand for the raw iron ore or other material that goes up into China to support the property market. So that's having that knock-on effect. And I think you also are still starting to see the impact of efficiency gains across the transportation sector. As every new, I think we've said it here many times, that every new diesel engine that comes out burns much more efficient than the engine that it's replacing.
Do you know, it's really funny you say that, because this is a relevant story. So last week we saw an article about COSCO, reportedly the Chinese offshore shipping company, a behemoth in the maritime world. COSCO reportedly come into the market with a 4.5 billion order for a massive 120 new ships, 20 Newcastle Maxes, 40 Kamsarmaxes, 30 pulp carriers, etc. Will go to domestic yards. But there's suggestions that China is using its shipbuilding sector as a tool to absorb excess steel and labor that is no longer going into the real estate sector. I mean, I find that really interesting, because is that how dynamic the Chinese sector is now, that the Chinese government is actually going, okay, the real estate sector isn't working, we need some new ships because we're going to start importing more, whatever it might be.
Well, you have to actually recycle the ships, because a lot of the ships in the fleet are getting old to the point where they can't use them commercially. So they need to get new ships in. And also they want to probably take advantage of the new technology. And so they want to get ships that are running more efficient than the ships they currently operate.
Yeah. I found that, I mean, it was all reported, and, I haven't seen anything in the press, but is that an acknowledgement of the real estate sector is failing?
Well,
Is
I
that
think
it's at least pausing?
I think it's an acknowledgement, but the problem I see with that is that the labor to build a house is not the same as the labor to build a ship.
Well, clearly,
I
because
mean,
you don't need
so
like a
just because you're
bricklayer
putting
to build a ship.
manpower into a shipyard to build more ships means that you might not get some good quality ships. You might get some poor quality vessels coming out as they learn how to weld, learn how to do all the different work that's required to build a steel ship versus building a cement house or a cement apartment building.
Yeah, yeah. I can't believe the demand for wheelbarrows is quite the same for building a ship as it is building a house, Russ. Yeah, I don't think our viewing public are gonna think that John and his mates, whoever it is in China, are suddenly no longer bricklayers. They're expert welders. Anyway, yeah. But I just thought the whole story was quite was quite interesting. One for the freight market, that new ships coming into the market. Is there more supply? Blah blah blah. And the second one being that China are acknowledging that
And
perhaps things aren't as rosy as they're painting.
and as we flip into the freight market, I mean, the continual story of how the container market is continuing to find support on the back of port congestion and other issues. Story out recently about the port of Singapore, one of the largest container ports in the world, showing delays of 7 to 8 days for box boats to get into the harbor and move their cargo, which is an expensive operation, which then that just pushes more issues in the supply chain, which is probably going to put support into the container market for at least another couple of weeks as that gets
Yeah, I mean,
in.
I heard about this breaking shipping story about the cost last week actually on a podcast called The Smoking Barrel. Did you read
Oh,
that?
I think I heard that one.
Yeah,
I think
yeah,
I
yeah.
saw that.
Because yeah, Bloomberg did it at the weekend, and so did the FT. They read your and watched your favorite energy podcast and thought that's a decent story. No, I'm joking. But if you can you pull up that Statista website now to see what the index is looking like, just to give some context. Context.
um,
Context.
Certainly.
No, but it's amazing, isn't it, that once there's a news story out there, I mean, tragically, what happened with the gentleman who lost his life on that Singapore Airlines flight to do with turbulence, suddenly any plane that's had any violent turbulence is suddenly a news story. And it's the same with, with it doesn't matter what it is, suddenly the cost of shipping has gone up and everyone's attributing it to the issues in the Red Sea. Of course, that's a factor. But, wow, okay.
I mean, it hasn't been updated since the last
It
time we
hasn't been
talked.
up. Okay, okay.
Yeah, but it still just shows that, the rates are going up. I mean, the recent story that was out there today says that, they are pushing closer to $5,000 now for a TEU or for
How
a
much to
FEU,
five?
up to five, over five.
Wow.
But again, it's a story of congestion in the ports. You've got boxes in the wrong location. You do have increased ship capacity, but because of these delays getting into port and getting boxes off and getting new boxes on and then shifting the boxes to places where they need to be, it's causing a complete upheaval in the container market. And again, we're going into summer. You got people trying to order stuff for Christmas because they're concerned about the supply chain.
Yeah.
And with all that adding in, it's going to cost, again, it is to me, a leading indicator of where inflation is going. And if you're someone who's hoping that there's going to be a rate cut, I think inflation is going to surprise everybody going into July and August.
Yeah, yeah, I agree with that. I think that going back to the gas oil story, why has gas oil been so weak, say Q2? I think you can only really attribute it down to the fact about inflation, about demand, about PMI numbers coming in weaker than a lot of people were hoping, and it's all around the interest rate story. We always said what's the year, what's the year looking like, and I hate this kind of it's a year of two halves bollocks. Excuse me, nonsense, because the first half's going to be one of like further demand recovery, and the second half is going to be one where we might see interest rates come off. And what happens is people did actually position themselves on the back of that. And now, things are looking like there's not going to be any rate cuts. I mean, you called that for a long time now. I was a bit more, I don't know, a bit more hopeful. I don't know, like what the word is, what the term is to you is what I'm looking for there. But I think that, our chief economist
How about
really,
realistic?
uh, yeah, I mean, but anyone who calls something right and this is a realist. Yeah, exactly. No, I hear you, but I think it's
Wait, let me go find my honey jar around here somewhere for my bearish dietary needs.
No, you're fine. I've got it here for you. No, look, just going back to how we started the conversation, OPEC, um, $84 for Brent, anything above 80, anything below 90, they have kind of put that floor down. They've kind of, painted that ceiling as well. It's job done. I can't see that, the market is just, everyone's getting on with it. Volatility is quite low. I would say volumes are quite low. There's not the furor of activity that there usually is this time of the year, with maintenance season over and people buying and people getting excited about summer. But the one part of the barrel that does seem like it's fully recovered, Mr. Edwards, our friend jet fuel.
Oh, jet fuel. Jet fuel seems to be on a tear going higher. The stats out of Memorial Day. So, we just had Memorial Day in the United States, which is the kickoff of the summer driving season. And it looks like gasoline demand was actually not good. Fairly poor showing for the gasoline side of the barrel. But for the jet fuel side of the barrel, it was a phenomenal showing.
Who
They
needs a car where you can get on a plane?
Exactly. Who cares about carbon emissions? Who
Yeah,
cares
yeah,
about safety factors and what have you? I mean, if you fly to grandma, fly to grandma.
yeah, exactly.
Um,
Just yeah, she's got probably got
but they expect to see jet demand above had a spike increase anywhere between 400 to 600,000 barrels a day over the Memorial Day weekend, over where it was the week prior, which is a fairly phenomenal number when you think about it. But when you see the numbers reported from the TSA, um, you know, record amount of people coming through that exceeded the 2019 levels in the United States.
Yeah. Look, I've got
Memorial
it
Day
here.
weekend.
Let me just put it up for you. Look, you can see it here. I mean, daily air traveler throughput and the daily 7-day moving average, based on the TSA data down here. I mean, look, oh God, Jesus, look at this stupid COVID thing. Look at it. It's just when I look back and I think about COVID now, I'm like, what? Really? Did that actually happen? Like, or am I imagining it? Anyway, this was
When
obviously
you,
a dog,
but when you
and
see
then
the green line,
yeah,
there's Memorial Day weekend right there. Nice big spike higher, and I think it translated to jet demand. Now, one of the interesting factors about that is that with more people flying, if they increase the amount of planes, jet demand should be going up on kind of like the same exponential curve. But then you throw in the efficiency factors on all the new
yes,
planes that are coming out, you may not actually see that translate into sustainable jet demand.
yeah. I mean, look, this is Roland, my colleague. He wrote this great article the other day. Reach out to your friendly neighborhood Keplerian who will possibly share the article with you. But yeah, that's what they did during COVID 2019. I mean, the more fuel efficient aircraft is around a 20% gain versus 2019 levels, which is okay. More people are flying, but it needs less fuel to get there. But demand is certainly increasing. I mean, just go down to this last article here. The balances in the US. Look at the 5-year range in this grey band here. 2023 is up here. You can see the balance 230,000 barrel surplus. But down here, our forecast and our S&D model actually show a deficit coming into the balance of the year. Don't sue us if you buy, Q4 regrades in the States. But yeah, it's certainly a good news story for jet, which has long been a sort of laggard to recover, isn't it?
Well,
Since
that
COVID.
has been the one side of the barrel that's been lagging behind across the world. And I think when you look at it from a U.S. perspective, because the U.S. dollar has been so strong, you as a traveler have a big incentive to travel to places which have a weaker currency versus the U.S. dollar. So coming to Europe, where 108 on the euro U.S. dollar exchange, going to Japan 150, was it 154? The of the year of the yen to
Yeah,
the U.S. dollar.
yeah, I'm sure what it is. I know cable is 127.70 this morning.
So, I mean, when you have those nice cheap exchange rates, yeah, 157 on the yen US dollar,
Yeah,
it makes it where you might have an incentive to go do an overseas trip. You take the family, go to Japan because it's that much cheaper from where it was a year ago.
yeah,
Uh, and so, nevertheless, I think that's why you'll see a nice kickoff, at least from US centric travel to around the world. And you'll see that also concentrating in other countries. Now, the other
yeah,
factor on air travel that is a bit counterintuitive is that in China, the amount of domestic air travel has increased, but the international jet travel has not. So they're seeing more Chinese doing internal trips, traveling to the different areas around China versus taking the long haul voyages to the Middle East or to Europe as they have done in the past.
Yeah, it's funny you say that. I mean, just before we move on to other currencies, I want to touch on that in a minute, India especially. Um, when I was in Singapore, I did notice the split in terms of tourism. That how many more mainland Chinese now coming into Singapore and seeing the Merlion or the Marina Bay Sands or all the sights and sounds that Singapore offers. Vast majority Chinese, vast majority there in an organized group, and I think that Southeast Asia, when I was in Thailand last year, lots of Chinese were touring. So I'd argue that they're probably only staying, the Chinese are staying in Asia. Maybe the long haul into London or Paris or even here now, we're not seeing quite the influx we saw pre-pandemic, but it's an interesting metric to kind of have a look at. Just on the jet demand story, it's funny because I listened to the radio this morning, and one of the stories was about what there's an Eid break coming up, Eid al-Adha, so lots of people usually get away and do a long weekend or whatever, but not a lot of people are this year. But people planning their summer holidays because it gets hot in the Middle East, so people want to go up to Europe. But there's a lot more focus on budget holidays, people not wanting to fly the premium airlines who will remain nameless, and they want to go on more of a budget airline. People just seem to be a lot more cost sensitive. So it's not like people aren't traveling. It's just people are a lot more conscious about where they're traveling. But I would argue, except in the US. And this is why inflation will be sticky because, okay, what do we read into the fact that gasoline demand is poor, but jet fuel demand is up? Are people going, in terms of personal consumption, are they saying, yeah, we'll just get on a flight. We're going out to Florida, but let's not drive. We'll get on a flight. It's going to be the same kind of cost where gasoline prices are, etc. And if the consumer keeps on spending like that, which it seems like they are, and it's it's that that path, that outlook going forward seems to be not changing there. Interest rates will stay higher for longer. They will stay around these levels.
Yep, most definitely. But the other impact on inflation is, of course, crude oil prices. We mentioned a bit about OPEC plus, but the other interesting thing, and the pending no action going into the second half of the year. The other thing that was a bit interesting is that Reuters put an article that they expect to see Saudi Arabia actually cut their OSPs,
Right.
which is the official selling price, which they sell the crude to different regions around the world, because Saudi Arabia still sells their crude oil on destination restriction, where other NOCs sell it on open contract, where you can take the oil wherever you want.
Yeah.
Now, the interesting dynamic that has shifted in the Far East is the TMX pipeline, which is brought in the Canadian oil sands, which would normally be exported via the U.S. Gulf Coast.
Yeah.
But now, because the TMX pipeline is up and running, you've got a 500,000 barrel a day export channel now for Canadian heavy oil, which goes directly into Aframaxes, which can go directly into China, and thus puts more competition on the Saudi heavy and some of the other heavier sour barrels that are in the Asian Pacific region,
Yeah.
and probably even knock some Urals out of the question at this point.
Well, I mean, it's funny you say that. Not plugging, but we actually hosted a webinar on this very subject yesterday about TMX and its effects on other grades and what it means for flows. I mean, there's a boat loading now, the Dubai Angel. There was something I was reading as well, and I don't want to give sketchy information. Not that I haven't done that my whole career, but about it's going to be called like diluted bitumen. And it's how it'll get into China if it's called diluted bitumen, encourages more tax.
Well,
Anyway,
that actually changes the tax treatment of the barrel, because if it comes in as diluted bitumen, I believe it comes in tax free, where you don't have to pay a consumption tax on it. Where you bring it in as crude oil, you have a consumption tax.
I think it's the other way. This is why I didn't want to. It's there. Hang on 1 second.
This is why the teapots bring in the diluted bitumen, because they don't have a Chinese import quota for crude oil, but they can bring in the diluted bitumen outside of the import quota scheme. And this is how you see a lot of your Venezuelan and Iranian crudes get mixed in with other materials to make the quote unquote specification on the diluted bitumen and
yeah, I
move
mean
to the Chinese market.
The taxation Chinese end of diluted bitumen is twice as much as it is for crude oil.
Ah, okay, then I was wrong. All
it's
right.
the other way, but you were right. It used to be tax free, so a lot of people used to
Yeah.
document it as as bitumen. But yeah, like next week, let's have a more dive deeper, or when we next record, dive deeper onto the TMX, and I'll get some details out because I think a lot of people are moving on that. Just in terms of on crude oil imports and what the Saudis are going to do, I'd argue that the OSP story would be probably because they're having to compete more and more with Russia and what Russia are doing with India. You know, there was a story out yesterday again on Reuters that Rosneft have committed to sell at least 3 million barrels of oil a month, and they were going to pay for it in rubles. Now, there's a few things
That was to Reliance Industries, one of the largest refineries in the world.
Yeah, correct. So that's just one of the Indian buyers. I mean, they've also paid for crude in rupees. They've also paid for it in Chinese yuan. I know it's part of this BRICS conversation about moving away from, you know, the petrodollar into other currencies. I prefer to personally leave that conversation. I think that that's nonsense because they've still got a price for it. You know, the FX will still be done. I just think that Rosneft in particular are hungry for strategic partners. And the only way that they can really do that is to take, well, however people want to pay for it, then they will do it. But as long as they can be cost competitive. And I think that
Well,
Reliance.
I think the cost competitive piece is there as well as finding the short, because if anything, if you're a producer of crude oil, you need to find the short.
Yeah.
But I would disagree on the fact that paying for crude in an alternative currency does help reduce the dominance that the U.S. Banking system has on energy trading around the world. And it does kind of fit into the BRICS discussion around, oh, we must have another currency in which we can transact on, because once the U.S. gets kicked out, the U.S. loses power on what they can do to inhibit a trade. If you're not using the U.S. SWIFT system, then the U.S. has no control over you.
No, I know, but I agree
And
with you, but this is we're on dangerous territory here. But the two banks that are supposedly structuring this are India's HDFC Bank and Russia's Gazprom Bank. Other details weren't available. Apparently, it's sold at a discount of -3 delivered to off Dubai quotes. I don't know where that compares to similar grades and how it compares to Saudi OSPs. I'd imagine cheaper. But how far do they go? Reliance have a presence in the States. Do the US authorities, can they attach these sanctions? I don't know. I think that.
Well, you got to remember though, in Russian crude, the price cap mechanism is based on the utilization of Western services to facilitate the trade. That's the price cap mechanism. And so if you're using rupee to buy price capped crude or outside the price cap, you are not violating sanctions because you're not using Western services.
Okay, but I mean, I'm speculating here, and like I said, dangerous ground. But is there a way that the US authorities could make life difficult for a Reliance in the States? So that's a big political show there, isn't it?
It's a big political show because, again, what's the underlying reason why the price cap was put in place was that nobody wanted to see a shock to the oil markets by banning Russian crude outright, and so or Russian products and crude petroleum outright from the market. So if the U.S. then tries to be an overlord over reliance in the U.S. and put pressure on reliance in the USA, that sends a huge message to everybody else in the world that you can't touch Russian product. Now, if you remember, back when the price cap mechanism came in place, the U.S. was pushing all the major trade houses, please continue trading Russian oil, please continue doing this, just follow the price cap rules, please get involved, because they were afraid of the shock to the oil markets that would happen if there was a blanket ban on using Russian products or moving Russian products. So I think politically the U.S. won't do anything because they can't, because it's an election year. Nobody wants to see gas prices at $6 a gallon.
Yeah.
And as long as the trade flow into India and into Reliance isn't touching Western services, happy days. They're complying with the price cap.
What? I mean, it comes down to this. Okay. Oh, look, Reliance have just sold a diesel cargo into Europe. Oh, I wonder what crude they use to refine this diesel.
Well, 3 million barrels a
Would you?
day or 3 million barrels a month into Reliance. The Jaguar refinery is what, 800,000 barrels a
No,
day?
more. It's just over
Or
1
I'm
million
sorry,
barrels a day.
1.2 million barrels a day.
Yeah. Yeah.
So you're basically looking at 2 days of refinery runs that would make up, and they're going to have to bring in other crude to fulfill the other days of refinery runs.
Yeah. Yeah. I'm just looking here. We've got a new shiny uh refineries tool now on the Kepler side. Yeah, 1.4 in June there'll be 1.4 million barrels a
Okay,
day.
so 2 days of refinery runs is what this Russian contract meets. So the other 28 days out of the month, they're running something else. Now,
Yeah,
that's not how a refinery runs. A refinery will blend the Russian cargoes in with the other cargoes they're bringing in. And so there'll be a blend of other crudes that they're going to run. But still, at 1.4 million barrels a day, it's a drop in the bucket. And under the rules of operations, once you materially transform that molecule from a feedstock into a finished good, the origin changes of the oil, of the material.
yep. Yep. I'm just having a look here. Let's just go Russia into Reliance, into Jamnagar. Yeah. So in April, let's go barrels a day. Yeah, Jamnagar importing 460,000 barrels a day of Russian crude.
So roughly, what is that?
Well, I mean, they peaked in February 2023 at 850,000 barrels. But to put that into context,
That's like 30% of their feedstock.
Yeah. To put that into context, let's go April, 563,000 barrels in April 2024. In April 2020, it was 113,000 barrels a day. So yes, it's lots. I mean, it's an information smorgasbord on the smoking barrel this week, Edwards, isn't it? It's a smorgasbord. So so let's wrap it up. So let's see. 84.50 on Brent. I think you're right. Some OPEC rollers have been priced in. Nothing to report home there. Gas oil still looks crap. OPEC are going to roll over at the weekend. Inflation's still sticky, but it doesn't matter because the US are going to fly everywhere again because I got all this money.
Yeah,
So
cheap US dollar or strong US dollar versus other currencies. It's
there
a
you go.
cheap vacation. And look out for that Dangote gas oil cargo that's going to come out and go to Rotterdam.
Yes, yeah, well that's another one to have a proper look at. But yeah, no, it's been good.
All right, everybody. Well, thank you. That's all the time we have for today's episode. Please click like, subscribe, catch us on YouTube, on LinkedIn, and catch us live and in person at the various functions we travel to around the world. And
Ciao.